pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy, such as used cars and trucks in particular. There's sort of a perfect storm of very strong demand and weak supply due to the reopening of the economy and various factors. We see airplane tickets, we see hotel prices, we see other things. Those are things that we would look to stop going up and ultimately to start to decline as these situations resolve themselves. They don't speak to a broadly tight economy and to the kind of thing that has led to high inflation over time. I will say that these effects have been larger than we expected, and they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time, and that inflation will then move down toward our goals, and we'll be monitoring that carefully. Of course, we're prepared to use our tools as appropriate if that turns out not to be the case, to guide inflation to 2%.
Thank you. Let me follow up on that, because we know that inflation statistics are fundamentally flawed right now due to the pandemic. We typically measure inflation using a basket of goods and services that represents what people usually purchase, but the pandemic completely scrambled what everyone was spending money on. People weren't traveling or going out to restaurants, so spending on those items stopped entirely, while spending on groceries surged dramatically. As a result, a lot of economists question whether we should be relying so heavily on inflation statistics that we know don't represent what people are actually spending money on. So my question is, do you have any concerns with relying on traditional inflation statistics, which we know are unreliable right now in setting monetary policy?
I think the overall point is that the data that we're looking at in the labor market and for inflation and for growth, it's in such an unusual setting of reopening the economy. We have to be very humble about our ability to really try to draw a signal out of it, and it may take some patience to see what really is happening. Specifically on inflation, you're really talking about consumer price inflation, the CPI. We actually use at the Fed PCE, personal consumption expenditure inflation, and that the basket is actually updated on a monthly basis for PCE, and that's one of its more attractive features from our standpoint. Still, at a time like this, when people are changing their consumption patterns in ways that are outside of experience, I would say there's also a challenge there, even though our measure is in fact updating monthly in terms of its basket.